What is up, everyone? Let me know in the comment section down below or in the chat if you can hear me now. I was having a lot of issues with my mic earlier. I think they got resolved. And this is going to be the third time of me trying to film this video. So if you can let me know in the chat, if you can hear me loud and clear, it would be much appreciated. I really do look for your feedback on that. As I wait for the chat to come in, because there is a delay with going live, we are going to be talking about many things regarding the stock market. We're going to be talking about SOFI stock, which I know a lot of you love and want to see the stock move higher so that you can make some money off of it and you can be happy as an investor in this company, which is, in my personal opinion, is a company that is doing great things, and long term there is a lot of potential. Otherwise, I wouldn't be talking about the stock. Otherwise, I wouldn't be invested in this company the way I am through leaps and using the options market to hedge my position a little bit and collect premiums. Thank you so much for letting me know in the chat. Also, hit that subscribe button, ring that bell, and smash that like button to help support the channel. So a lot of people might have been watching this for the third time. If that is you, I'm sorry, but thank you so much for sticking around. We are going to go over, thank you, Andres. Thank you, everyone. Erica, Michael, thank you so much. So the first thing, let's just get into it. We're going to take a look at the chart for SOFI. SOFI today, as you may already know, moved up 12.5%. The Nasdaq moved up around 3.3%, so we almost 4x what the Nasdaq did. Now, SoFi, that is great to have that kind of beta. Beta is basically the difference between the index. Beta can be good, beta can be bad. When the index drops and your stock drops more than the index, that's because it's a high beta stock, which is SoFi. So expect volatility when you invest in a company like SoFi. Up 12.5% is great, but a lot of companies were up a lot today. If you take a look at NEO, up 17.27%. But all of these companies, most of the companies that have been selling off and bounced hard today, they all have a similar pattern here, and they all are approaching a resistance. If you look at the 10-day, 30-minute for NEO, you can see that we have a resistance here at around $25. That's what the stock was trading back in January 26th of this year. So just a couple of days ago, we were at those levels, and that's a resistance for NEO. If we take a look at SoFi, we are also approaching a resistance. Back in January 27th, we were trading at around $12.85. That's our first resistance. Then we have another one here at around $13.50. This $16.47 is when we had that banking charter news, and we had a buy the news, sell the rumor type of event. There were a lot of traders, and I was worried about this, and I mentioned this in other videos. A lot of traders will get out after the catalyst is over, after they see a pop. And if they don't see a pop that's big enough for them to hold even more, then they're going to sell. $16.50 is just not going to cut it for me. This is not the kind of returns that I think SoFi is capable of getting with this news that is fundamental to the business and changes the underlying asset in SoFi. You are going to have a company that is far more profitable, can offer way better products and services, and can expand and grow their market share through this banking charter. So I think it's fundamental to the business. I think it directly changes your evaluation of the company and improves the DCF valuation for this stock. And that's why we're going to see analysts come out with higher price targets, in my personal opinion. Now, when we also take a look at the Nasdaq, and this is extremely important. So there was a lot of discussions. Hit that like button if you like this video. But there was a lot of discussions internally through the Discord, which you get access to if you join the Patreon, on what's going to happen with the market, because nobody knows exactly what's going to happen with the market, but this was something that we were afraid of. We saw stocks like SoFi, like so many other companies like PayPal, that just completely got demolished over the last couple of months, right? Dropped more than 50% off of their highs. Solid companies, Disney included, massive drop off of the high. From peak to trough, you're looking at stocks that are definitely in bear market territory, more than 20% down, and some of them even more than 50% down. But the index itself, on an index level, was basically at all-time highs. In some cases, continued to go on up. So what was the risk? Well, the risk there was that the stocks that dropped so much, when we finally got that correction on the index level, they would continue to drop even though they had had such a massive sell-off. And that's what we saw. We saw a correction on the Nasdaq. We dropped almost 15% from peak to trough. We saw a 10% correction on the S&P 500. Those stocks that dropped 50 something percent, they continued to drop and they got even cheaper. Now we're starting to see the index bounce back, and because of that beta that we mentioned earlier in this video, some of these stocks are bouncing really hard. So it's good to see that we had some level of support on the Nasdaq right here at around $13,725. 12 viewers plus me equals 69. Steve, you my boy, man. You my boy. So we had that support at $13,725 on Monday, which a lot of people were saying was capitulation. I thought myself personally that we saw a little bit of capitulation and that support could hold. But we were getting in a range here like the next couple of days after Monday for the rest of the week where we were not setting higher highs. We were bouncing off a support that was higher than 13,725, but we weren't bouncing higher than we were the prior day. So we were setting lower highs, which is a bit concerning. But finally today, with this massive move of 3.3%, we broke that prior high of $14,641. We're currently trading at around $14,930. So today was a big move. But like you saw, a lot of companies are at resistance levels. So tomorrow we could see a pullback. What happens after that is key. Are we going to be able to break this 14,000? What's going on with the VIX right now is a little bit weird, right? So when we take a look at the VIX, and I talked about this on the private Discord, when the VIX was shooting up and fear was at an all-time high, I was considering shorting the VIX because typically the VIX comes crashing back down to reality. But right now, we're still at elevated levels at around 25. The VIX is trading at 24.83. If you take a look at the 1 year, you can see how quickly it tends to fall. But right now, it's kind of hanging around a value where it can move up or down. We'll see what happens. I think we are going to move down. But the VIX is staying where it's at right now. In my personal opinion, the reason why it hasn't fallen back down to around 20 or sub 20 levels is because this week we have a ton of major companies reporting earnings. We have Amazon reporting, we have Facebook, we have Unity, we have Ford. The list goes on and on. If you take a look at Earnings Whisper and you take a look at the companies that are reporting this week, Google also included, there are a lot of big companies, important companies to the stock market. And depending on how earnings go, we could see a stock market that has a VIX back down to below 20 because we have that news out of the way and it was good news, or we could lose those gains that we had in the Nasdaq if earnings do not support and we reintroduce fear based on earnings. I don't know what's going to happen. I think we're going to be okay. I do believe earnings on most of these companies are going to be good, but we'll see what actually happens and then we'll adjust to that. I will never buy the dip 100%. I will always keep cash available so that I can continue to buy the dip. I'm at a position right now where I have a decent amount of cash that I can buy multiple dips. And because I sell options against my position, I'm also using my stock and my options to create cash flow, put it in the bank, and then use that money to buy the dip or buy more companies, even though they aren't dipping. It all depends, but it gives me flexibility. PayPal also reports this week as well. That is true. I am invested in PayPal. I have leaps in the company, so I'm looking to see what happens with PayPal. But this is a company that is very important We'll see what happens. I like PayPal because it's an inflation hedge, because they charge just a fee, and as prices rise, so will the amount that they collect. So the PayPal reports on February 1st, which is tomorrow in after hours. So we'll see what happens with PayPal. Thank you so much for the reminder, Michael. I completely forgot that they report tomorrow. There's a bunch of companies that are reporting. If we take a look at the earnings whisper, and we take a look at earnings for the week. So, before open, before the bell on Tuesday, we have ExxonMobil, we have UPS. UPS is going to be important to look at, not just because of a stock, but based off of economics as well, because they are reporting a higher cost for travel because of energy. How that impacts the stock and what they say about that condition will be crucial for the whole entire market moving forward, because it's going to give us somewhat of an indication on inflation. We have AMD, PayPal, Alphabet, General Motors, Starbucks reporting after the bell tomorrow. We have Waste Management before the bell on Wednesday. We have Facebook, Qualcomm, Spotify, T-Mobile reporting after the close on Wednesday. On before open on Thursday, we have Merck, we have Penn National Gaming, ConocoPhillips, Lilly, Honeywell, Estee Lauder, Chevron, and then after the bell on Thursday, we have Amazon, Ford, Snap, Pinterest, Activision, Unity, Fortinet, Skyworks, GoPro. There are a lot of companies that are reporting this week. And because of all of this potential movement off of earnings, that's why we're seeing the VIX hanging out at around 25. That's my opinion, at least. So we have a question: will fintech move based off of PayPal earnings? And my answer to that question is yes, yes, and yes. We will see sympathy plays. Just like when we saw Netflix drop, we saw Disney drop with it. If PayPal was to drop, then fintech is going to drop with it, because it's one of the leading stocks for fintech. If PayPal was to report good earnings and the stock was to increase, then we're going to see fintech move with it. There's going to be a degree of variation. For instance, Netflix dropped 20 something percent off of earnings, and Disney dropped around 5 to 6. We will see some variation, but PayPal will move the market, that sector with it, in my personal opinion. I'm going to get back to the chat in just a second, but I want to head back to SoFi and I want to talk about some of the catalysts. We got the Super Bowl. You already know this probably. The Los Angeles Rams are going to be playing against the Cincinnati Bengals at SoFi Stadium. That is a marketing event for the company to help gain exposure and maybe gain some members as well. I'll be watching the Super Bowl. Maybe SoFi has a commercial. Maybe they are able to get a bunch of downloads, a bunch of apps downloaded from Apple and Android. We'll see what happens, but it is a marketing event, and maybe we see some traders pile into the stock before and after the event. We also have a bunch of institutional holders, a bunch of institutional ownership for SoFi stock. Now, this is a 13F filing. If you don't know what a 13F filing is, it's a filing with the SEC that institutions and hedge funds have to file to let people know what they are invested in. Whenever they buy or sell stocks or derivatives like call options or put options, they have to report, but they report for the prior quarter, and this information is delayed. And right now, you typically see a lot of this information being reported on so that the public can actually see. And what you're looking at right now is Fintel, and Fintel is going to show you the institutional ownership for any given stock. It's going to let you know the 13F filings. There are many websites to do this. Fintel is one of them. Fintel is good for a lot of this, I'm going to call it offhand data. So the file date, you can see here from my screen that we have a lot for January 31st, And this list goes on, and there are a ton. But what I want to focus on is what are the institutions actually doing? And if we look at this website, secform4.com, which I think is much better in relaying the information, you can sort through the table. You can take a look at what insiders are buying as well. I just like this website better. If we take a look at Mizuho Markets Americas LLC, that is the top holder in dollar amounts right now. It's the top institutional holder of SOFI, coming in at 26.5 million US dollars. This position is not a new position for this institution, but yet they are adding to it. The prior report versus the prior report right here, you can see that the increase is 342%. That's a massive gain. And also the portfolio weighting is 1.382%. That might not sound like a lot to you as a retail investor where your positions are 5, 10, and some of you guys might be YOLOing and putting 50, 100% of your portfolio in SOFI. But 1.382% when you have $26.5 million in a given security, that is a nice weighting for an institution. The next one on the list in terms of value size is Russell Investments Group at 0.03% or $21.1 million. LifePro Asset Management. This is a new position. This position I find to be quite interesting because not only is it a new position, it's a huge weighting. It's 3% of their portfolio, $10 million, a new position. Great to see. Awesome to see that kind of investment in SOFI. If we sort from previous report, we can see that there are a lot of new positions and they're ranked. And if I can sort by 100, we can see how many of them there really are. So in total, in the prior quarter, for what's been reported so far, we're still getting new 13F filings. We have 26 new positions in SOFI. And if we take a look at portfolio value, we can see that we have at least 2 institutions that have more than 3% in this stock, and at least 5 institutions that have at least 1% in this stock. So that is good to see as well. In my opinion, it's just good to see institutionals buying in this company and a lot of new positions. And I honestly believe that as we move forward, we're going to see more and more institutions buy into SOFI stock. That's my opinion, at least. Yes, please give me a like if you can. I really do appreciate it. If you want to join the Patreon and be part of that private Discord server where we go over investing strategies, where we go over selling call options on SOFI, you can do so. A link is provided down in the video description. It's $5 a month. It's a great way to support the channel, and I really do appreciate it. So let's go. Let's go to the let's go to the chat and let's take a look at some of the comments that I'm seeing right now. Let me pop out the chat and let's take a look at what some people are saying regarding SOFI. So I'm going to go up a little bit. So we're good to go on the volume. I thank you all for letting me know that. Coming in loud and clear. SOFI 5+ years. Leap? Question mark. Michael, if you don't know what a leap is, it's a long-term call option in the money. Essentially, what I own personally is I own call options that expire in January 2024, and the strike price is $7.50. If SOFI is above $7.50 by January 2024, I won't lose money. What I paid for them was around $7 in premium. So my actual break even is $14.50. If SOFI is above $14.50 in January 2024, I will be profitable. But the reason why I buy those leaps is because it lets me leverage my money. I only paid $700, around $700 for those leaps. That's what they're trading for right now. If I was to buy 100 shares of SOFI, which is the exposure I get with the call option, I would have to pay around $1,300. So it lets me leverage my money. In addition to that, I can sell poor man's covered calls against my leaps. For instance, I was looking at the $16.50 strike price for SOFI because that is the prior resistance. That is where the stock went off of that banking charter news. I could sell that call option and collect 2% premiums every 2 weeks for if I'm able to sell them for $15 and the stock is or the leap is trading at $700. There's a lot of math involved and it's kind of hard to just explain on the computer, but it's not difficult and we can dive more into it if you join the Patreon if you have any questions regarding leaps. So, David, is short interest still a big concern? So, I never thought short interest was a concern for SoFi. We'll see what happens when we get the new FINRA data. But the short interest right now wasn't a concern, in my opinion. And I actually think, now that you mentioned that, what a lot of what we saw today in the market overall with so many stocks moving higher were shorts covering. I think the sentiment got extremely bearish. There was a lot of bad news coming with the market, a lot of stuff coming with the Fed that I think institutions, hedge funds did open up some short positions in some stocks and they are covering them now. They were short-term trades, and that's why we saw a little bit of a rally in the stock market. The end phase is up pretty good too. SC finally balanced, both filled gaps. 12 viewers plus me equals 69. Give him a like. PayPal reports. FinTech, we talked about that. Jose, Brent oil trading above $91. Let's see if it can hit 100. Andreas, I think PayPal are going to beat earnings. I hope so. You know I'm invested in it. I hope they do. ¿Qué pasa, mi gente? Qué linda es la vida. Vamos, SoFi. De verdad, vamos. Vamos a la luna. Vamos a la luna, SoFi. Thank you so much for that. Sean, how soon will fundamentals improve with SoFi based on the bank charter? That's a good question. So almost immediately. So fundamentals will improve almost immediately. And this is a very interesting question. SoFi is actually, they postponed their earnings to March. And I think the reason why is because they want to give us news on that banking charter. They want to say, hey, we had our earnings report. The banking charter is in effect. And now basically what we're going to see in our guidance is we're going to see this as adjusted EBITDA. We're going to see an increase in adjusted EBITDA because of the banking charter. Having that clarity coming from Anthony Noto, the CEO of SoFi, and the management team of SoFi in the earnings call and in the print, having that kind of clarity will allow analysts and investors to more accurately analyze the stock and perform their valuation. That could then result in analysts increasing their price targets following earnings. Now, if earnings do not work out that way and the stock drops, a lot of analysts will readjust their price targets based on where the stock is trading. Unfortunately, that's the way it happens. There are only a select few stocks that do not change price targets when we see a massive drop. One of them is Uber. Today, Uber got a bunch of new price targets for the stock. It got 3 new price targets, and they were only slightly modified, even though the stock is down a lot. And the price targets are almost double what the current share price is. So analysts are still extremely bullish on Uber. They're reiterating their buy and overweight rating. They're adjusting their price target, but just slightly, a couple dollars, from $67 to $65 when the stock is trading at around 38 or something like that. So there's a lot of analysts increasing price targets in Uber Technologies. We got a question from Steve Baxter. Another way to get more shares in SoFi is to PayPal. Have you ever given a class on options? Makes sense. So no, I never given a formal class. I do have a tutorial on Thinkorswim. I'm going to make tutorials on other platforms as well. Let me know what platform you use and maybe I can show you. I know how to buy and sell options on Robinhood because that's where I started, but I no longer use Robinhood. I use Thinkorswim, which is a TD Ameritrade product. That's what I use to buy and sell most of my stocks and options. And I'll also have a WEBULL account. WEBULL is great because it's really easy to use on your phone. You get access at 4 a.m. And if you sign up with the link provided down below, you can get 2 free stocks worth up to $2,800. I do believe that WEBULL is one of the top brokerages for your mobile device because they really focus on ease of use while also providing you a ton of tools that you can use to buy and sell stocks. So Hero, you're saying 100% that SoFi is going to hit $30. If it does not hit a $30, what do I get for that 100% statement? Do I get a subscribe? Do I get a like button? Do I get you to pay for the Patreon? Do I get a super chat? Let me know what you think, Hero, because 100% that SoFi is going to hit $30. That is a bold statement. I hope it's correct, but I highly doubt we see that kind of move. I'm just being honest. Yo voy 10K average, 19 per share. ¿Cuándo crees que pueda recuperarme? $19 per share. Yo creo que en como, no sé, pero $19 a share. Give it like, I don't know, man. 19. We'll see what happens. We got to break $16.50 before we head to $19. SoFi target price $30 in next 12 months. So, you know, with these analysts, SoFi was trading at around $25. We saw those price targets come out. SoFi, when it was trading around $15, we saw price targets come out in the $20 to $25 range. Me personally, I think that SoFi could get to that $20 to $25 range. I think 30 is on the higher end, but sitting at where we're at right now, $25 are massive gains if you bought the dip. So you just got to be realistic, and you got to appreciate the gains that you see. What are the futures for tomorrow? If we take a look at the Thinkorswim and we head on over to the Nasdaq, we can see that futures are down 0.41%. If we take a look at the 1 day, 1 minute, and here we are in after hours, 6 p.m., we're basically flat, but we did drop down to 14,820. The move isn't really big. Nothing to be worried about right now. We're just kind of consolidating. We'll see what happens. But like I said, we had a massive move. A lot of stocks are approaching their resistance level. I think a lot of what we saw today was the fact that today was the last day of the month, and we also saw some shorts covering. A lot of shorting was happening because of that Fed, and that's why we saw those big moves to the downside as well. I will be psyched if SoFi moves to $23. Same here. I also would be psyched. So that pretty much wraps it up. So my next video, I'm going to be talking about setting up your scanner on Thinkorswim. If you don't use Thinkorswim, and there's a large learning curve, and that's why I'm making those kinds of videos. But hands down, one of the best platforms for analyzing, buying, and selling stocks. It's one of the most. It has probably the most features, so that's why there's a large learning curve, but it's a really good software in my opinion. So that wraps it up. Do not forget to hit that like button, hit that subscribe button, and ring that bell if you like content regarding the stock market. Also, do not forget that this channel does have a Patreon, $5 a month, gives you access to the community, gives you access to the Discord server where you can ask me or 500 other investors questions whenever you want. And it also gives you access to valuation spreadsheets. We have a valuation spreadsheet for SoFi. The fair value of SoFi back before the bank charter based on a price to sales multiple was around $12.50. That's when you got in. That's when you would be able to get good returns based on an appropriate required rate of return. We got below that. We were able to buy even lower for SoFi, and now we're starting to bounce back a little bit. So there's a lot to like here. There are a ton of sales. Just do your due diligence, be safe, invest appropriately, and if you have any questions, always feel free to ask other people, myself included. But with that being said, it's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya.